Texas Roadhouse stock, ticker symbol TXRH. This stock is up 40% year to date, massively outperforming the S&P 500. On the 2nd of May, Txrh reported earnings with a solid beat on EPS. Their revenue was reported at 1.32 billion, missing the analysis estimations by a small amount. People love Txrh stock for different reasons, and one of them is the dividend. And I understand why, with dividend yield at 1.5% and 17% growth rate in the past 5 years. If we look at the total returns in the past 5 years, we see that Texas Roadhouse stock massively outperforms the S&P 500. So, could this be the perfect time to buy Txrh stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Txrh do? Texas Roadhouse is a restaurant company operating in the casual dining segment. The company's operating segment includes Texas Roadhouse, Bubba's 33 and others. It generates maximum revenue from the Texas Roadhouse segment. Looking at the earnings, we see that revenue was reported at 1.32 billion, up 12.5% year over year. To me, this looks really good, especially since the net income and EPS both increased 31%, meaning margins are increasing a lot here. Comparable sales increased 8.4%, which is an insane number, and to me this is very important. It is very easy for Texas Roadhouse to generate more revenue by opening new restaurants, but you want the existing restaurants also to grow in revenue. Restaurant margin in dollars increased 23%, which is an insane number. Restaurant margin as a percentage increased 17.4%, which is again an insane number. In total, 9 company restaurants and 3 franchise restaurants were opened. For the full year of 2024, Texas Roadhouse expects positive comparable sales growth, store week growth of roughly 8% and wage and labor inflation of 4% to 5%. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Texas Roadhouse stock is a 11 billion market cap company. PE ratio is at 34, indicating they could be overvalued right now. Later in this video I will show you my 3 price targets for Txrh stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on the current valuation. Revenue is at 4.8 billion, and in this graph we see that revenue went up really steady and consistent. Of course there is the impact of the lockdown period, but other than that it looks really good. Margins are going up in the long run, which is something that I really like. Again, we see the impact during the lockdown periods. Most recently, margins are increasing as well. This isn't updated yet in this graph. EPS is looking really good. It is similar to the revenue and margins, which is very nice. Analysis expected EPS will increase at a high pace, around 13 to 17% per year. To me, this looks really good. For the revenue, analysis expect also pretty high numbers. On average, you're looking at 9% growth per year. Again, looking good to me. Return on assets is sitting at 12%, which is a great number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 11.3%, which is a really great number. It is also higher versus the 5-year average, which is a good thing. Current ratio is at 0.48, which is a great number. Nothing really special to mention here, to be honest. Right now, Texas Roadhouse has $794 million in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Txrh has $213 million in total cash, so they can pay down a decent amount of their debt, but I wouldn't mind to see a higher cash position here. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is great. However, it is not really steady and consistent. We also see the impact during the lockdown periods. Shares outstanding are decreasing, which is something that I really like. However, with the current share price at a premium, there might be better things to do with the cash than buying back shares. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.5%, which is a decent number. Annual payout is at $2.44 and payout ratio is around 45%. I prefer 50% or lower. So right now they have 55% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 17%, which is a great number. On top of that, they increased the dividends for quite some years. However, in the lockdown periods they cut the dividend, hence why we see only one consecutive year of dividend increases. In here we see the dividends paid since 2012. You see that Txrh did increase the dividends at a high pace. As mentioned during the lockdown periods, they cut the dividend. Right after things cooled down, they started increasing them at a high pace. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is really steady and consistent around the 50%, except for the lockdown periods of course. To me, this looks pretty decent. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to increase at a similar rate versus previous years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare Txrh stock with the overall market, in this case the S&P 500. Next to that I added Domino's and Wendy's. On the 5-year chart we see that Txrh massively outperforms the S&P 500. In total, Txrh returned 231% including dividends. The S&P 500 is sitting at 97%, and Wendy's had the lowest return with 15%. Domino's was also really close, beating the S&P 500. On the 1-year chart things look pretty interesting, with Txrh again beating the S&P 500 with twice the return. However, Domino's had a slightly higher return here. On the 6-month chart it is again Txrh that is having a massive return with 62% versus the S&P 500 sitting at 19% return. Wendy's is really having a bad time here. On the 1-month chart it is again Txrh crushing everyone in this list, also because of the earnings that were released. Bottom line, Txrh beats the S&P 500 and others in this list in the long run and in the short run. So could this be the perfect time to buy Txrh stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8, 10 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 6.5, 7.5 and 8.5. For the free cash flow margin I'm putting in slightly lower numbers. For the PE ratio I'm putting in 20, 22 and 24. For the price to free cash flow, I'm putting in the same numbers again. In my opinion, Texas Roadhouse has a unique concept in growing at a high pace while maintaining control of the situation. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, Txrh stock is around $167. I hit analyze and we see a lot of red numbers. We have a low price target of $88 to $95. We have a mid price target of $127 to $136 and we have a high price target of $180 to $192. To me, the mid to high price target is the most justified here, meaning the stock is in the middle of this range. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Txrh is that the stock has tanked a lot lately. They keep on performing very well and investors seem to like it. Most fundamentals look really good to me, especially the consistent performance is something that I really like. From a dividend point of view, things look pretty good. They pay a solid yield and keep on increasing the dividends at a high pace. From a value point of view, things start to look interesting. Margins are increasing and that is exactly what this company needs. They also buy back shares at a decent pace, meaning the PE ratio should come down a bit. But people really like to buy Txrh stock, so that's why the valuation is a bit tricky on this one. For now, I will keep analyzing them from time to time. I already have a decent amount of Txrh shares in my portfolio. Whenever there is a big dip, I think I will buy big time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.